Today we are going to talk about taxable profit and the difference with accounting profit. In Cyprus, as you know, the corporation tax is 12.5%. Okay. Therefore, you need to pay this tax according to your profit. Let's assume that our profit is 1 million. According to that profit, you need to pay 1,025,000 as tax. This is wrong. Why is wrong? Because the tax was calculated on the accounting profit. The correct tax is this percentage here multiply the taxable profit. In our example, the taxable profit is 800,000. So in our example, we need to pay less tax. According to the calculations, the tax is only 1,000, and this is the correct one. Okay, why there is a difference between this and this? Let's discuss, for example, first of all, let's calculate this amount here. So our income is 3 million. Our expenses is 2 million. Therefore, our profit is 1 million. Now, let's see our example. First example. Okay. In the expenses, are included some expenses, okay, that are not allowable by the Cyprus tax authorities. Let's say the first one is fines. Okay, we have fines of 10,000, and this one are not allowable by the tax authorities. Therefore, we need to adjust. If we adjust this, it means that we increase our profit. Let's put it in our calculation. So this one here will be decreased, so the accounting profit will be increased. Now, let's see example number 2. In the expenses are included some general provisions. This, of course, again, is not tax allowable by the tax authorities. Again, we need to adjust, and of course this will increase let's assume that this is for the amount of 50,000, and let's put it in our example. Now let's move to example number 3. Example number 3. Now in the income are included some income that is tax-free. Okay. For example, some profit of the sale of share. This, of course, is not taxable income. So we need to adjust. So this one will decrease our profit. Let's say that this profit is for 316,000. Okay. Something I need to note about this is that the profit of the sale of shares is for a company that the sale of shares are not its main activity. This is very important. Let's put this in our example. We decrease our income. So the total from the first 3 examples is the following. Okay, now let's move to our 4th example. Let's call this extra adjustment. In this example here, we are going to talk about some transactions not made on an arm's length basis. This here means not made on a market price. Okay, for example, a company sold to a related company products not on the market price. For example, 1000 units for the amount of 5 instead of 6. This is market. Therefore, in that case, it means that the income is understated by month 100,000. So we need to adjust. Let's put this on our example here. So our total is the following. $800,000. So as you can see, in our scenario we have 25,000 difference between accounting and taxable. So one anyone can make this simple mistake and pay, in our scenario, 25,000 more tax. So always, for the computation of the tax, needs to seek professional advice.